Well, I suppose we can go ahead and get started. Y'all have been waiting long enough. You guys gave us 10 minutes to get started. So let's go ahead and get started, folks. Thanks so much, Charity, for confirming. Welcome to our tax time meetup, folks. This is always a great time for us to reconnect and kind of learn about the impending tax due dates and deadlines. Always something that I learn from the team that ends up having a conversation here. So we have Stephanie Soloman from Block Advisors here with us. We have Miss Jaydra Perfetti. And Jaydra, can you actually correct my pronunciation so we make sure we get your name right?
Yeah, you got it. Jaydra Perfetti.
Oh, okay. Jaydra
Nailed
Perfetti
it.
from Paper Investigator, Miss Eve Davis from In or Out Tax Services. And then we also have Anthony here helping us moderate the conversation today. We're going to go ahead and start presentations with Anthony to kind of give us a lay of the land, and then we'll go ahead and get started with Stephanie right after. Anthony, you want to go and take it over?
Yeah, thank you. So this is certainly a great event that I know a lot of people look forward to every year. And thank you, Carlos, for introducing our presenters for the evening. This is a really big benefit, I think, for host-to-host members. So we thank you guys all for being host-to-host members and continuing your membership and inviting anyone else to join, because these are moments that can really give back. Taxes are always I'd say extremely daunting for a lot of people, and the experts that we have here today are there to kind of reduce that load for you in many ways. And a lot of the questions they come up with and that they've heard over the years, they'll talk about tonight. And I think if everyone leaves a little calmer with regard to tax time, I think we'll have achieved some success here. So this is a 90-minute agenda event. So we're going to kind of go through introductions from each of the presenters that Carlos had just mentioned. And what we'll do is I'll collect questions in the any written questions in the chat box, which if you guys haven't been on Zoom in a hot minute, it's kind of directly in the middle, and 2 clicks over to the left, it looks like a little bubble. You can click on that. If you want to set it to everyone, it's automatically defaulted to everyone. You can send your question to everyone. If you wanted it just to me, that's fine too. My name is Anthony Rollo. It should say my name on there. And what we'll do is I'll take those questions at the Q&A portion, and we'll go through them. And of course, if you'd like to ask live questions, once we get to that point, we'll have an opportunity for that as well. And we're super blessed to have great participants tonight with us, and they do have some benefits that they'd like to talk about at the latter part of our call, and I'll let them speak about that at that point. But without any further ado, I will kick it off to our first listed presenter for a self-introduction. And Stephanie, that would be Stephanie Soloman from Block Advisors. That would be you.
I am hoping that this works. I'm having some technical difficulties. I can't get my phone to log in right, and not video, and I don't know, it's doing stuff. So
well, we hear you. We hear you and see a black Tom. We hear you and we see your name. So
okay, so that's good enough. It's better than I thought we were going to do. My name is Stephanie Soloman. I've been working for Block Advisors. It is a subsidiary of H&R Block since 2010 or so. I've been doing the tax talk for host to host. It was pretty much since the beginning that they started doing the tax talk. Love doing rentals, love teaching people about taxes. And I like working with the 2 other gals that we've been doing for the past few years. I think we all have pretty much the very similar knowledge, and we feed off each other very well. And I just enjoy being here.
Thank you so much, Stephanie. It's great. We're really thankful for all the presenters to take their time out and offer this type of environment. As you said, I think when we look back, these always have good replays and everything. So it's certainly a big bonus, and we're glad everyone is here. I will move along to Jaydra for her self-introduction.
Hello, everyone. My name is Jaydra Perfetti. I am with Paper Investigator Inc., and we're doing a little bit of rebranding this year for our tax wing, so soon to be Tax Dragon advisory stuff. So that's happening. Also, my pronouns changed since last time, so I have discovered some non-binariness. So now I'm using the they them pronouns, and let's see. I have had my own practice since about since the beginning of 2017. Before that, I worked for IRS for a long time, so I started out. Getting a peek behind the curtain, as it were, working for the man, and spent almost 15 years there before getting bureaucracied out and started my own practice. So it's going strong. So I'm grateful to be invited back to this fun discussion. It's always great to be with Stephanie and Eve, and happy to be here and answer questions. And hopefully everyone leaves calmer. We'll see. That's our goal.
Thank you so much. And I apologize. I did not see on the small screen your new pronouns, but thank you for letting us know. And we're excited to have you here again. I will move over to allow Eve to introduce herself. Eve, please, the floor is yours.
Thank you. My name is
You're
Eve
welcome.
Davis. I am with In or Out Tax Services in Southeast Portland. It's actually the 25th anniversary of when I started In or Out Tax Services. And I also have a short-term rental myself, and so I think this is at least the 4th or 5th year in a row that I've worked with Jaydra and Stephanie on this panel, and I enjoy it a lot. So thanks for inviting me back.
Yes, of course, you're welcome. Awesome. Well, so great to have everyone introduce themselves, and I know that since we have a good amount of people here who wish to kind of jump in, I'm sure, and start asking some tax questions, I wanted to open it up, to the floor and see if someone wanted to jump in. And again, you can ask the question specifically to one of our presenters, or you can throw it out there, and each of the presenters is certainly welcome to answer it, since everyone has I think a bit of a different view and scope and lens, so that's always helpful. So if I'd say we can, from a format perspective,
and happy birthday.
If there's a format, if we want to maybe raise. Someone's got a birthday going on.
See you later.
Happy birthday to whomever that is. If you could go on mute, that'd be super helpful. But if we want to do the raised hand, where's the raised hand now? This is so funny. They moved the raised hand somewhere. There's a react button, and
can we? I'm sorry. One thumbs up.
Angela, I see your. Is this your virtual raising your hand?
Sorry, I just muted myself. Somebody unmuted me. Sorry.
No worries, no worries. We welcome you to unmute yourself and certainly raise your hand if you'd like to speak. Otherwise, you can certainly type a question in. Looks like we have one question in the chat that I'm happy to ask out loud. But please, go ahead and use it looks like it's now stuck in the react button. You can raise your hand there by hitting the react button, and you hit react and then hit raise hand. So it's not like a separate button like I think it was more recently. So the first question for our tax presenters is there anything new regarding Airbnb and short-term rentals that we should especially be aware of? And David, if you wanted to clarify, are you speaking of the upcoming tax year or the one that we just closed?
Oh, I'm thinking for filing for 2024.
Great.
So
Great.
thank you, Anthony, for that clarification. But yeah, I'm just thinking for
Yeah.
the upcoming filing that we'll be doing, beginning in January, beginning 2 months from now.
Yes.
Is there anything especially new that we need to be aware of, or that we ought to be aware of, or anything great that's coming down the pike, like, some great new tax deduction that we'll be able to take that nobody knows about yet, that we can find out first right here with host to host? I mean, that would be really cool.
That would be very cool. Well, Eve is ready to let you know what is going on with regard to Airbnb and STR stuff. So I will let Eve go ahead and answer the question.
Thank you.
welcome.
There's nothing new.
That's also really good news, though. That's maybe the best news that you could give us.
There's nothing new for 2024 or 2025 at this point. Any kinds of tax changes that might be coming because of the new administration it doesn't happen immediately. So yeah, nothing new right now.
Well, Eve, we hope that it doesn't happen immediately. Remember COVID and retroactive stuff. So
they did. That's true.
Yeah, that's true. But she's right.
Nothing right now.
We don't have anything right now. There's just a slight little thing that's a difference, which is bonus depreciation. The percentage that we're allowed to take for 2024 is a little bit lower. Most people don't do bonus depreciation for rentals, but if you did, that's going to be lowered. It's not 100%. It's not 80%. I think it's down to 60% for 2024.
Yes, and that is something that is true. Thanks for bringing that up. That's been set up for a while now, that bonus depreciation has been going down by percentages for over time now. So,
I mean, the reality is that in 2018, we had the Tax Cut and Jobs Act, and the person who's going to be taking over the presidency, in my opinion, this is purely my opinion, felt that he was going to be consecutively in office for 8 years. And in 2025, there's going to be a come to Jesus moment where the tax cuts we're going to pay for them. And so it's going to be very interesting to see what happens. The tax law, I can't believe, is not going to change, and it's probably going to change significantly, but we don't have to deal with that, hopefully, in 2024.
Thank you, Stephanie.
Yeah, I think I'll just add in there the sort of recurring announcement about the 1099Ks. So remember, like every year for the past, 3 years, we've been like, oh, get ready. If you receive payments through a third-party system like Airbnb or whatever, they're going to send you a new form. And then at the very last minute, so we tell you about that during this meeting, and then at the very last minute, the government's like, just kidding, people are not ready. We're not going to do it this year like we thought. We're going to do it next year. So here we are again. If you got, over so many thousands of dollars that you received through Airbnb, you might get this 1099K. Anyway, or you might not. Who knows? The government might decide that it's all still too soon, and you don't need to worry about it. So you may or may not. This may or may not be the year finally that you get one of those forms. It doesn't probably make a big difference to you whether you get the form or not, because if you are having your income come through Airbnb, you're reporting it with their year-end reports and stuff anyway. So I don't expect that for this group that actually makes a big difference.
To clarify, you're also talking about things that would be coming from say Venmo, PayPal. Is that what those things as well, in addition to Airbnb?
Right. Yeah. So if you have a Venmo business account or a, PayPal business account or whatever, that's the other. Any of those third party, probably Zelle also, any of those third party things. If it was, if you had a business account, then they'll be theoretically sending you that 1099K. Yeah.
I'd like to piggyback on Jaydra, and I hope it was Jaydra, because I can't see who's speaking. So,
It was
You're
Jaydra.
doing great,
Okay.
Stephanie.
okay. So the 1099K, that's a good thing. I actually went a couple years ago, 2 years ago, to Washington, D.C. To talk to Congress people about the 1099K. So it went from the requirement for that was $20,000 and 200 transactions. Now it's $600. So almost everybody is probably going to get the 1099K. The one thing that I want to caution people is not so much on Airbnb, but you have to keep track of anything that they take out of it, right? They're going to report as your earnings the gross amount, which means anything that they pay for taxes or anything, and then Airbnb pays it, is going to be added in that 1099K. And so you need to make sure that you don't give your tax person or do your taxes based on the 1099K and don't consider this extra money that went out. It's more so on people who are sole proprietors. The sales tax thing is going to be a freaking nightmare about that. But for Airbnb, I just want to caution, make sure you keep track of all of the fees that you pay, because there are significant fees. And if you use, it's not Airbnb, but the other one, the other big one, Vacasa, they have a lot of fees and they do a lot of payments for you guys. And so if you use Vacasa, you need to really make sure that you have two things when you do your taxes, which is the 1099K, and then everything, the account that shows where all the other money went, because otherwise you'll be paying tax on money that you never received or you had benefit of.
Yeah, I agree with that, Stephanie. And I know Airbnb gives you in that report a great summary of the income, the fees they took out, and all that you can use. So that's always a great thing to have too from people, is the Airbnb report. I think VRBO might be do the same thing. So it's important that we have all that information, and it's usually pretty easy to get.
That's super helpful. And I think when David mentioned, taking payments in different ways, having all that stuff together kind of on a regular basis, so you're not scrambling at the end of the year, is probably going to be helpful for a lot of people. Before we move on to the next question, this is tied into it, and Stephanie, you did bring it up with regards to bonus depreciation, since in 24 it'll be 60, as I understand, and then 40, and then 20, unless things change, of course. I'm not sure how many people on the call here today have actively looked at bonus depreciating things within their short-term rental, but I do know that we have, and we feel that it's been a good approach from our side. We've personally done cost segregation studies on a handful of our properties, which it'll open up a whole discussion if we want to go in there. That can be, beneficial from a offsetting of W-2 income or other income. And since the bonus depreciation is going down each year, I guess 22 was the last year that it was 100%. Since its inception, it's getting more difficult for that to be of significant value, I would say. But I'll let the presenters share anything they want on that before we go on to the next question, since whenever I hear about bonus depreciation, I always think of immediately to kind of cost segregation studies that might be valuable for people who are putting a lot of money into their property.
I think it's an important part of, sorry, Stephanie.
Go ahead.
I think it's, okay, cool. I think it's an important part of planning for sure, because, if you're in a position where, bonus depreciation is just front loading your expense. If you don't have a bonus depreciation opportunity, you still get to claim, the expense of that. It just happens over a longer period of time. And so sometimes it's worth looking at whether it makes sense or not to, take advantage of the bonus depreciation in any particular year. Because if you're having a higher income year, then maybe you want to front load some of that expense so that you can, offset that higher income. But if you're having, like, maybe you had to do a lot of repairs in one particular year or something, and you didn't have rentals for a long enough period of time that your income is like lower in that year, it might make more sense to spread that over some other accounting periods rather than front loading it to just make a bigger loss in this year that you don't necessarily need, or can't take advantage of depending on other, income factors. So it's always worth a discussion with your tax person for sure about, and bonus depreciation is one of those things that you can figure out during the process of doing your tax return. So you don't have to decide, like, before December 31st, am I taking bonus depreciation or am I not? It can be, in the context of the rest of your tax return and part of that, like, preparation process. Here's the difference. Does it make more sense for you this year, or do other choices make more sense?
That's pretty much what I was going to say too. I'm sorry, my dogs are going to bark, but Jaydra, so that was exactly what I was going to say too. And also, if your income is such that it's not going to help you, there's it's just really beneficial to talk to a tax professional about when to take bonus depreciation, when it's beneficial, because if you have enough income, it's not going to matter for you, and you're going to take it, and then it's just going to sit there in a bucket until you can use it.
And the other thing to mention with that is it worth it to do a cost segregation study on your property? Where they would break down all the components, and then and that is one reason to do it, because then there are items that you can do that bonus depreciation on. So the cost segregation study and the bonus depreciation can go hand in hand. And again, it's something definitely talk to a tax professional about, because there are some great planning opportunities.
Thank you for that. Would anyone care to, again, I'm not trying to delay the next question, but care to explain a little bit more about a cost segregation study for people who may not be familiar with it?
I can take that. Cost segregation, for layman's terms, is taking each component of the house, which is plumbing, electrical, whatever, and depreciating over a smaller point of time. Depreciation for a rental basically is 27 and a half years. But there are things that you can do that maybe we can depreciate on a lesser time period that gives you a little bit more of a bang for your buck, and maybe gives you a loss depending on your income, maybe negates the income that you had. At the end result, though, if you're looking to sell the property or something like that, you're going to have to pay the piper on the other end. So it's just something that you need to talk to someone about. But you can take the components of a home or a property and depreciate each aspect of it. That's what cost segregation kind of is.
Yes, exactly. Like, you can break down the appliances, the cost of the appliances, say, and those can be depreciated a short period of time and possibly do the bonus depreciation. The other thing I want to mention is short-term rentals are 39 years instead of 27 and a half for long-term. And that, is a much longer period that you have to take for that real estate. So it can be an advantage to break it down into those smaller components. The cost segregation study is not cheap, however, so you definitely have to weigh in whether it's worth it for that as well.
Super helpful.
I had a client a couple of years ago that tried to do a like-kind exchange for one of their rental parties, or rental parties, rental party. Anyway, rental properties, and And due to a series of unfortunate events, the acquiring property didn't get acquired in the correct time frame, so they couldn't do their like-kind exchange. So one of the things that they opted into was a cost segregation study for the new property, so that in the year they had to claim this big gain, this big capital gain for selling their property that they tried to exchange, they also had this like bigger initial depreciation thing. So that's kind of like one example of a time when that kind of thing can be useful. I will throw out there that there's some people who are like there's Bitcoin bros, and there's like people who are like evangelists for their various things that they think are the most amazing, and there's definitely cost segregation study bros out there. So according to some people, everyone should do it all the time no matter what, and it's the silver bullet. So just I know that Stephanie and Eve and I all agree that it's not just some kind of magical silver bullet, but it can be a really cool tool if it makes sense for your situation.
I agree. I have so many people talking to me about cost segregation, and I do so many rentals, and I tell them all the time it is not, for the most part, not going to be beneficial for the most part for the clients that I have. They're over $150,000. It's not going to make a difference, and maybe not do that, because then you have to pay it on the other end. So you just really have to consider. The cost is not cheap for cost segregation. So, I mean, would it be an expense? I mean, possibly we could take it as an expense, but it's still not going to maybe help for most people. But there are the outliers that it will help.
Super. Thank you. That was very helpful. I'm sure a lot of people who
I will
have
say
heard about
I
it
did
or
not expect
learned
to get
about
like a master class on cost
Yeah, no,
segregation
right? That
tonight.
was great. That was very helpful. Thank you. Okay, well, let's continue on with some other questions that we have in the chat. And again, of course, if you want to raise your hand and ask live, you're welcome to come up on stage. The question is, my tax person says I conduct yard services for my B&B in my house. Is there a way I can do this? Jaydra, I see you nodding. Would you like
Oh
to?
yeah, sure. Yeah, I think anytime that you have something that is part personal use and part income producing, then you have a situation where it's time to allocate. So, unless the yard work is like only work that's being done for the front lawn or garden or something in front of your house, and you're like Airbnb is like way over there as its own little ADU or something, and so the yard work has nothing to do with the part that's being rented. Unless it's that situation, then I think if you're just Airbnb a room in your house, and part of the maintenance of the whole property is totally applicable to you renting out a room. It's just a matter of allocating, based on some reasonable method, whether it's like square footage or time or something reasonable. But some portion of that expense, I think it makes perfect sense to include as an expense toward that Airbnb.
I concur to that.
That's super helpful. I think a lot of people who miss that if they're hosting in their own home particularly, that can be a huge benefit considering the cost of labor and such things like upkeep.
Can I ask a follow-up question? Because that was my question.
Yes, please.
Can you cite me some place that I can, in the tax documents, that I can show to my tax person, because she has said she can't do this for several years now. So I think she's going to need more than me saying that.
It would probably be in the instructions for the Schedule E. The thing is that there's allocation. So like Jaydra said, if you have 2,000 square feet and 500 square feet are for the Airbnb, you should be able to take that percentage of the cost of upkeeping the home, landscaping, etc., to make it habitable for the Airbnb client. In additional, I have had people that have like they rent the bottom part of their home and they live on the top part, and they have a hot tub solidly for the use of the Airbnb people. I let them take 100% of that because that is only for the Airbnb people. Yeah, I wouldn't take the landscaping and stuff like that, but you should be able to take the percentage of making your home what it is that you're advertising.
Since
Maybe
you
we can
can't see
send them the
Stephanie, I
recording.
just want you to know that you got a lot of head nods throughout that explanation.
Maybe we can send the recording to your tax professional.
Send, and if they want to, I mean, I'm sure we give our email at the end of it. If they want to talk to me, I have been doing Airbnb tax returns since 2012. Like it's almost like from the beginning. And people at that time were like, is it Schedule C? Is it Schedule E? And I did all sorts of research. I called the state of Oregon. I called the IRS. I talked to the city of Portland. And if you're doing rentals, we get to take a percentage. And if they want to email me and ask me to quote them, I will do so.
Great, thank
Thank
you.
you. What a nice offer. Thank you very much.
And that's the other thing, as Stephanie mentioned, Schedule C versus Schedule E. Most people that do short-term rentals, it is on a Schedule E. It is not, should not be on a Schedule C, not subject, where it's subject to self-employment tax, unless you're giving substantial services. And also, I've seen other people say that if you have one rental property, that you wouldn't be subject to the qualified business income tax deduction, which I disagree with that as well, because if this is a for-profit situation, then there's no reason you can't take that deduction.
I agree. It's all about what the QBID, the qualified business income deduction. It's all about, did you perform 250 hours throughout the year of stuff to make this money? And if you can say yes to that, I mean, generally it's more properties, but you can do it. I have people that are very, I don't know what the word to use, but they micromanage in a way. So they're doing 20 or 30 hours a month in work to get that money. And so if you're working to get that income and you meet the standard, you can get that the QBID deduction. The QBID deduction basically is it gives you a tax break on certain income, and you have to have there's things you have to meet, but it's the Schedule E versus Schedule C. When Airbnb first came out, everybody wanted to put on a Schedule C. Schedule C is business income. And what business income does is it causes you, when you have a profit, to pay 15.3% tax into Social Security and Medicare. In most cases, we don't do that unless you're doing substantial services. So if you're picking people up from the airport and you're carting them around and you're going to give them a trip to Mount Hood and do the whole Fruit Loop and all of that stuff, maybe you can do the Schedule C. And some people want to do that because with a rental, it's passive income. And with the rental, you're limited to having a loss when your income is over. It starts phasing out after 100,000, but 150,000, you're done. So some people want to provide that service, which means cleaning every day and, giving meals or whatever you do to show substantial services. It's all subjective, and it's all, based on what you can tell your tax pro that you're doing in order to figure out what form you're going to be on.
Super helpful. Thank you very much for that. And I wanted to draw everyone's attention to the chat where Jaydra has provided some links, IRS link and the snippet of how to divide expenses between rental and personal use, which is super helpful. for anyone. I mean, whether you host in your home or you're visiting your short-term rental, if it's not your part of your or on the property of your primary residence, which is actually another question that I'll ask after. Let me see here. I'll ask it after I ask Michelle's question. So Michelle had a question that said, if you run your short-term rental under an LLC, does that make a difference for the Schedule E versus Schedule C?
Quick question, quick thing, no. But something that we do need to talk about is for people who have put their rentals in an LLC and they did it before 2024, there is something that's been going on for a couple of years, kind of like the 1099K. It's been brewing, they've been saying, but now we're coming to terms with what that means. And this is the Corporation Transparency Act or something. It's not a tax thing, but I want to make sure that everybody is aware. Anyone who's on this phone call or listens to this later, if you have an LLC and you created it before 2024, you might not know about this. And this is the beneficial ownership information. If you Google BOI, it will take you to a website that is www.fincen.gov. This is a governmental agency that wants to know that everybody that has an LLC isn't making a shell company and doing business overseas and not paying tax on it. I went to San Diego and did the IRS tax forum back in September, and they were saying, the penalty for willful, and we have to define willful, but willful not compliance is $591 a day to not file the BOI. The BOI, you do not need to have a third-party person do it. There's a lot of people that are charging $200 to $500 to do this 5-minute thing. You go to fincen.gov, you go to BOI, you fill it out. You do not give your social security number. You give, like, if it's a single person LLC, you put your LLC information in, you put this is the person who owns it, and that's it. You upload a driver's license or passport. That's it. But it's very, 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 very important to do that BOI. That was my soapbox for the year.
Good
I'm
call out.
so glad that you mentioned that because I have it on my list of things that I was going to make sure we talk about. And this may or may not be helpful, but some background about like why this came to be is that FinCEN is the Financial Crimes Enforcement Network, and that is the government agency whose job it is to make sure that like terrorism isn't getting funded and, you know, human trafficking and all of these kind of super major international financial crimes. And so the US is a little bit out of step with the rest of the world in how well our government can tell who owns what company and where those profits are going. So that's why this whole thing came about. And yep, and basically if you have an LLC registered with a state, you are required to do this filing. And you have until December 31st to do it. So you still have plenty of time if your entity was created before 2024. And a couple of like quick items of note is that just like Stephanie said, do not pay someone else to do this for you. There's so many scams out there that will do it for you for $500, $200, blah, 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 whatever. It's a free thing and it takes less than 10 minutes. It's so easy. You can do it. It's not complicated. And the only thing you need is like your LLC info, your name, and your EIN if you have one of those, and then your own personal information, which I'm sure you know, and then you have to upload like a photo of your driver's license or your passport, depending on which one you do. The only one note of item of note that I've been sharing with folks out there is during the process of filling this out, they'll give you an option to sign up for a FinCEN ID. And that's just a number that is assigned to you by FinCEN. It doesn't relate to anything else other than this beneficial owner information filing. And I don't recommend that you sign up for that number at this point in time for a couple of reasons. Number one, because it's not required. You don't need it to complete your FinCEN filing. What it's there for is if you're a beneficial owner in like 1 million entities, it's there to save you the time of having to re-enter your own personal information 1 million times as each entity does its filing. Or if you're part of an entity and you don't want to give that entity your personal information to do their filing, you can sign up for this FinCEN ID and give it to the company, and they can link it to you that way. So I assume that most of you probably don't have 1 million entities. But the other reason is because at the moment there isn't a mechanism to close that FinCEN ID once it's opened. So for now, the way it is that you get assigned that FinCEN ID for life, and that's not a problem unless someday in the future you want to like sell your property or sell your business or like retire. And if you still have that FinCEN ID, that means you still have to go in there and update FinCEN like every time your driver's license renews or your passport renews or whatever. So it's just a gift to your future self to not sign up for that FinCEN ID at this point. Like I said, weigh it for yourself. Maybe it makes sense if you have 10,000 entities you have to put your info on, but here's some information for you. They'll probably fix that eventually. They did acknowledge that that's an issue and they're working on it, but they've been working on it for 2 years. So, they're going at the speed of government. So who knows how long it will be till they fix that. Maybe before you retire, but maybe not. So there's my additional soapboxing on the FinCEN BOI filing.
And I agree with you, Jaydra, about that. So I'll tell you a real life scenario. I'm in San Diego. I went to the class because you get all these options of all these classes, and I wanted to do the BOI. It's not a tax thing, but I want to know because I want to be able to tell my clients about it. And I'm sitting here listening about BOI. So what it doesn't entail is anyone who's got a corporation that already does SEC filings, because all this information already goes to SEC. If you have a nonprofit, all that information already goes to nonprofits. But what I didn't realize is my sister in Florida is a property manager, and they have HOAs, and she's property manager for about 46 of them. So I called her and I said, "Hey, did you know about this?" And she's like, "No, tell me about it." And I said, "Well, okay, any company, regardless of the state, who has registered with the Secretary of State." So we think about Oregon more or less, but there's 50 other states plus Washington, D.C. that you can register. So anyone that has gone through the Secretary of State has to register. Sorry about that. Their information with the BOI. And anyone who did it before 2024 probably didn't get the 20 million emails that the new people have gotten. They might not know. And if you've ever had an LLC and never closed it, you need to close it. Otherwise, you're going to be subject to this. You do not have to update this every year, but you do have to update it when there's changes, much like Jaydra said. If there's a difference, your driver's license is renewed or whatever, it is going to be something that you're going to have to report. In my sister's case with an HOA, board members change every year. They're going to have to update that every year. It is just really important because, again, the non-compliance of this is $591 a day. Imagine that times 365. They're serious about it. The second thing is that there is a lawsuit about this, and the lawsuit is they're still going through it. That's why we have put it on hold for a couple of years. But at this point, at the end of the year, if you haven't filed and they find you in willful is a big word, but willful non-compliance, you get that penalty. And so it's just better to register it and get it done. It takes 5 to 10 minutes, like Jaydra said, and it's very easy to do. But you just have to, if you've ever had an LLC and you just didn't do anything with it, you didn't pay the Secretary of State, whatever, you might want to make sure that it's closed so you are in compliance. Soapbox 2.
Oh, if only I had waited. I literally did mine. Like I have many of them, and I did them all last week. And I checked the box. I was like, I would like a nice number to be associated with this entity so I can keep them together. Darn it. Oh well.
Like Jaydra said, the cost under segregation situation, some people think of it like a silver bullet. They think everybody should do it. LLCs are the same way. Everybody's like, have an LLC because then you can deduct everything. And that's not the case in this case. I will mention that this beneficial owner information form is it's not an annual thing you have to do. You have to do it the one time, and then you only have to update it if there's an address change or something like that. So at least that's good news. It's not something you have to do every year.
I'm glad I used my passport because I think that's longer than my license too. But still, bummer that I checked
That's
that
also
box.
what I did. So I would have to do it less often.
Yes, nice. And you don't have to pick a state. It was another. I was like, oh, that's an efficiency thing. I had to do like 10 of them. But yeah, okay, not a million, but 10. Awesome. Thank you. Really good call out because perhaps not everyone else here is getting the 5,000 emails for people saying, hey, I'll do it for you for 25, 50, 100, 200, $500 because that's out there, as you guys noted before. All right, let's continue down on some questions here. Oh, well, I think Carlos, the question that you popped in here, I think it was answered. Yeah, you don't need to. It is easy. Just have those items available for you, so you can kind of upload the image of your passport front. That's the key. Everything else is, well, the EIN number. You should probably have that somewhere easily accessible anyway. I popped a question in
Also,
there.
can I, sorry,
please,
really
yeah.
quick, just piggyback on that? So tax preparers are probably going to be pretty reticent to do this filing for you, even if you call and ask them, because there's some really weird rules about whether that can be construed as providing legal advice or legal representation, and accountants are not lawyers. And so that question is still outstanding. And so most tax preparers who I have seen discussion here and there in the forums and whatever are not going to do that because all of our insurance companies are telling us we could get in trouble. So it's easy and you don't need us. And also we may or may not be allowed to, as it turns out.
I agree with that. And then actually, they specifically told us, the IRS agents that were presenting the class told us, as a tax preparer, you should not do it at all because it is legal advice.
I will actually disagree with this. I don't think it's legal advice, and I'm willing to do them. So.
Awesome.
So if you want someone to do it, call Eve.
There you go. Well, yeah, okay. So yeah, so good call out there. I will tell you that one of my LLCs, I did pay $25 to have it done because I thought I wanted to see if it was going to be an easy button, where they had information already presumptively, and they still just sent me to their own form, and I still had to fill stuff out. And I was like, no, that's not why I did this. I know how to fill out forms, people. So it was a disappointment. It was a $25 disappointment, but nonetheless.
You
And I
got
will
off,
say
you got
that-
off cheap because most people are
Yeah.
telling that they're $200 to $500.
I had another one that offered for $150. I was like, I don't know if I think that this sounds like it sounds wrong. 25. When I saw the 150 and I saw the 25, I was like, okay, I'll play with the 25 and see how that goes. And when I discovered it was nothing more than I could very easily do myself, because they didn't already put the information in there, which is what I wanted them to do that I thought they had. I did the rest myself. Unfortunately, checked the box, but that's okay.
And I will say that, if there's any doubt as to who the owners really are, I mean, if there's many, many owners, and I'm talking about the people that I work with, that it's a single member, LLC or a partnership, where it's very clear who the owners are. I wouldn't get deep into, somewhere with a really large company, I wouldn't do that. So, but that isn't usually my client or most of our clients. So.
Awesome. All right, let's continue on. We are at the top of the hour, so everyone can stretch. We've got 30 minutes to go at least, but I know actually these have historically run late, as I recall. But I will ask the question that I posted in here to see if it helps anyone. Are there specific red flags or pitfalls that could increase the risk of an audit for short-term rental owners? Since all these special rules that we've kind of talked about, you know, and how, and then there's a good follow-up question that kind of talks about differences of that. But I'll let that question linger out there and ask the presenters for some of their thoughts.
Well, red flags, I mean, I often will get a person who will, not often, occasionally, that will tell me, oh, I have repairs and my repairs are $16,196. And they don't understand what we have to do with that. And I can't put that down as repairs. And even though they paid that amount in the year, we might not be able to take that all, but we have to depreciate it. And that is the biggest thing, I think, is repairs or excessive travel. I'm actually working on an Oregon audit right now with a rental, and you know, the things that they're asking are, you know, can you prove that you own the property? Can you, you know, and most of it's pretty easy. But when you have travel expenses and it's a short-term rental over on the coast and you've used it personally, and you can't take the mileage when you go and use it unless you're doing it to use it for work. I mean, you're going to go work on it, you're going to repair something, you're going to check on the property, something like that. But going to stay, you can't do it. So you have to watch the mileage. But you take the mileage, like if you have an Airbnb in town and you're going to Costco to buy stuff, or you're going to Bed Bath & Beyond to buy stuff for the rental, you can take that mileage, but you have to keep a mileage log. So the mileage log is important, and the repairs, don't just give your tax person, you know, this is how much I spent in repairs. You have to break it out. That's my thoughts on it.
May I ask a question? When you say break it out, how much, or what needs to be broken out?
So the IRS says that if you have $2,500 or less on a single invoice, you can expense that and you can take that. But let's say you do a repair on a roof and it costs $10,000 just to repair your roof. We can't take the $10,000 as an expense if it's on the same invoice. And so we have to know, when did you pay it? When did you do it? How much you paid on this invoice? If there's several invoices, let's say you have a window that you do and it was $2,100, then you do another window that was $2,100 on separate invoices, then we can be a little bit more creative. We can tell you, well, we can depreciate this or we can expense it. But anything that's over $2,500 on a single invoice has to be depreciated for the most part, depending on what it is.
Thank you.
That's definitely very helpful. And the question on the note that you mentioned on like keeping mileage and a mileage log, any good tips on that? And of course, obviously the mileage log is for when you're going to a property for the items that to work on it or visit it for making sure things are okay. Those are the important things, not just going there to stay in it. And that balance for short-term rentals in particular is very different, because the long-term rental, that's someone else's home. There's someone else who's treating it as their home versus a shorter transient stay that is typically less than 7 nights.
Yeah, that's correct. I mean, where I have the problem, not the problem, but where I have the issue with people who are writing the mileage off, I mean, absolutely, if it's legit, we're going to take it. I'm very aggressive. I will take anything. But we've talked about this in years past. But if you're just going there to go stay in the home, and it is a beach rental, we can't take that when you're just going there. You can say that you're checking on it, but when it comes down to it, if there's an audit, whether it's the IRS or worse, the Oregon, you're going to have to show, why did you go there? And if you went there to go stay, and it was just a de minimis amount that you spent to check that the oil was in the tank, we probably can't take that. But if you're going there to go and help the workers get in the house and do things, then that's a different issue.
I agree with that. If you're going to work on the property, you're going to paint a room, you're going to do some work to fix it up, repair specifically, then that mileage would be a deductible business expense. But if you're because you have an Airbnb, so you can use it both for personal and business, then that would be, and you're just going to stay, then, and you happen to, while you're there, you checked on something, then that would be primarily for personal use, not for business use.
Yeah, totally everything that Stephanie and Eve said. And also, if you're to track your mileage, get an app. Like, you don't need to write that stuff down in a little notebook or whatever. You don't even need to you don't need to do that flavor of effort. There are 1 million apps out there. They're all great. Just pick one that you like the use of best, or you like the colors best. There's so many. Pick one, and they're all great. They all basically do the same thing. You just open your app when you're ready to start making a trip for business purposes, and you just type in a little explanation of what you're doing, hit go, and then it tracks you via GPS. And then when you're done, you hit okay, stop, I'm done, and then it saves all that data for you and prints you a beautiful, lovely report at the end of the year, and you don't have to think anymore about it. Yeah, get an app.
I agree. Those apps are great. And also, if you have that app, you can separate into a category of, say, charitable miles and medical miles and business miles, and then you have all that for you.
I agree with the other two. I haven't checked the apps in a couple of years, so I don't know if they're still good or whatever, but Mile IQ and Stride were really good back in the day. But also, it's also important, just, I always like to try to prepare my clients for an audit, and hopefully, because I prepare for an audit, we won't get audited. But ultimately somebody does get audited. And so it's important to keep a couple of things. So the beginning miles on your vehicle as of January 1st, your ending miles on December 31st, and maybe have a couple of Jiffy Lube receipts or something that shows the miles. Then we have third-party verification of how many miles were on the vehicle.
Definitely what Stephanie says. Try to, towards the end of the year or the beginning of the year, have oil change or something done so you have the odometer reading on that receipt, so you can show the total miles that way in the year. We're coming up at the end of the year right now, so get ready to set an appointment for your car to get serviced so you have that odometer.
And if you didn't keep it, but you do go to the same service, like you always go to Jiffy Lube or you always go to Valvoline or whatever, they have your car's total, all the history of every time you've ever been there. So you can always call them and ask, or go in there and ask for them to print out your history, with them. I don't know how far back they keep it, but quite a while. So you can get, a record of all the historical times that you've gone to Jiffy Lube or whatever. So
That's a good, those are solid. And I was going to I wrote down Mile IQ was one. Stride, did I hear correctly?
Yes, Stride was the other one that was good.
Okay. Let's see here. Mileage tracking app. Okay. Was there one other mentioned, or those are the two?
Those are the two that I used to recommend. I usually recommend.
Okay.
And it's important to, I want to make sure that my clients don't have to pay tax on money that they don't have to pay tax on. So if you're going to Costco to get paper towels for the Airbnb, or for the rental or for whatever. Make sure that you track those, because I don't know, and if you're doing it with part personal, part business, and maybe it's a little different. But if you're going to Home Depot to get supplies for the rental, make sure you track those miles. It might be just a little bit, but my philosophy is that, if you nickel and dime things enough, it'll get to $1. And when it gets to $1, it starts, making a difference. So just keep track of it.
These are legitimate expenses. There's no reason to leave money on the table.
Agreed.
Well said. Very well said. David had a question here that is unique, but not to everyone. So sometimes you have long-term guests more than 31 days, and sometimes I also sometimes rent out my basement on a long-term basis. Is there any difference between STR and LTR for tax purposes? We touched on this earlier a little bit, but
for the city there is.
For the city of Portland, correct?
Yeah, for the city there is.
Also go ahead.
I was just going to say, for the city of Portland, if you rent it more than 30 days, you have to pay the long-term rental registration fee. Less than, you don't. So Airbnb less than 30 days, you're fine. You don't have to pay that extra money. And if you made less than $50,000, if you're in the city of Portland, or $100,000 in Multnomah County, then you don't have to pay the tax. But if you make over $50,000, or if you have a rental that is rented more than 30 days, you have to pay it's currently, last year was $70. I don't know if they're going to raise, they've been raising it a lot.
Okay.
So $70.
It'll probably be 75 this year. It seems like they're going up in $5 increments.
Yeah, I agree. It's been $5 a year.
I'm thinking that too. Yeah.
I will say that one of the other big differences would be your depreciation amount. Short-term rentals are 39 years. Long-term rentals are 27 and a half years. And I'm going to say that you want to maybe look at the average of the short-term and the long-term, because each year you can change that depreciation, the useful life. If it's more short-term 1 year, it'd be 39 years. If it's more long-term, it'd be 27 and a half. So I think those are one of the two main things of difference between long-term and short-term.
Did we
There's a
tackle all
whole
the
chunk.
questions?
I
Oh, sorry,
think
Jaydra,
there
go
was
for it.
one about, oh no, that's okay. There's a whole IRS code section that deals with short-term rentals. So, and it's got like a bunch of different things and different limitations and whatever. But as far as but that's kind of our problem, not your problem. So in terms of like what it looks like to you, you're still keeping track of stuff the same way, and you're still giving that stuff to your, tax person. And then, if there's you just have to let us know if it's a short term or a long term, so then we can, handle it appropriately. But as far as like what things are deductible and what things count at, at towards expenses and stuff, all that's the same.
I will say there's what you may have seen on TikTok or one of those, the short-term rental loophole. And, a loophole, to me, it's, if it's really in the IRS code, it's not a loophole, it's a legitimate deduction. But what it is if your average stay in your short-term rental is less than 7 days, then you can actually, and there's some other requirements like the amount of time and your material participation, but you can take a loss actually currently on your tax return if all those are satisfied. So something again to talk to your tax person about.
And as speaking as a tax person, when someone calls me and said, I saw on TikTok,
yeah,
I generally, I really hesitate, because TikTok and Reddit and Facebook and all of those, you know, you have to talk to a tax pro. The person who's doing your taxes, whether it's you or whether it's me, the knowledge behind the data entry is important. And that is why anyone that's doing tax return needs to have the knowledge. Currently, the IRS is trying to push for them to let people file online. And it's not for, if you have a rental, you can't do it. If you have a business, you can't do it. You have a farm, you can't do it. But that's the current thing. But that was because of the IRA, the Inflation Reduction Act, that is probably going to go away. And I think that the extra money that the IRS got is going to go away. And I think that that's probably for the tax pros, it's going to be better because they're not going to allow the IRS to do this stuff. Again, we don't know what's going to happen with this administration. We have, you know, people like Elon Musk that's going to be making policy for the IRS, I believe, is what I've read. So we don't know what's going to happen. But do not believe people who are saying something on TikTok. That's all I can say. Because most of the time, 99% of the time, it is incorrect and can probably get you in a lot of trouble.
Yes, totally. Or it's just missing some giant piece of context that's like key. Also a shout out to another reason to like have your mileage log and keep that really good in your app. Because like Eve said, there's some special rules for if your average rental period is less than 7 days. And part of that is having like a work log of how often you're doing activity and doing work in the for the short-term rentals. So keep track of that somehow, because if you want to say that you're a real estate professional and you know that's a particular tax term that comes with some like very specific requirements that Eve was describing, one of those things you're going to need is to know how many hours you were working in the business. So keep good records. Gift to your future self.
I will throw out what I use for, let me get the link here, for keeping track of time spent on things. Let me pull it up right here. This is the main page. It's called Toggle, and it's spelled Toggl. And yeah, I try my best to do it every time I'm doing something, even like house stuff, just kind of so I get in the habit of. I've been doing this for a while, but I find it's helpful to have that, and I think having the log and reports of it kind of at the end of the year, particularly if you were to be questioned about it, I think it would be very, very helpful in the, hitting the specific criteria that our presenters had mentioned. If you're qualified, if you are believing to be qualified as a real estate professional.
I think that's beautiful. I think that I wish people would keep, because that is the requirement, keeping a conceptuous log of what you're doing. And so if they question it, if you have the log already, that's beautiful. I love that.
Thank you. I'll make a note that I think might be relevant here, and it's got an expiring timeline on it too. So if you have a smartphone and you have Google Maps on it, I believe there may have been, and it may have been on by default, and it may be turning on, not be on by default in the future, but I believe there was a thing that basically the phone is tracking you behind the scenes. And what I'm saying is that could be helpful for you to have that data if you did not remember to log some of your data, some of your trips to your short-term rentals. So you could kind of go back into Google Maps and look into your account and such to determine if, oh, right, that's right, I went to this place back then. I saw it, I have the date, maybe forgot to put it on your calendar or recorded the toggle, et cetera, et cetera. So that could be helpful. And the reason I bring it up is because I've been getting notices from them saying, I have to do something by December 10th. And I think it's like making sure it stays on or something to do with data. But a good point to, if you are a Google Maps user in any way, shape, or form, if you have it on your phone, I think you're kind of by default a user in their mind. So you might have some of that information there if you're looking for it.
That's really good to know.
Okay.
And also another thing that we're talking about apps. So let's go back to the 1099K. The 1099K, I'm hopeful that they're only going to report business income. But we all have the situation where I send my kids money, and I send them money throughout the year. And is it over $600? Absolutely. So am I going to get a 1099K, and am I going to have to prove that this is, this is just giving my kid money for dinner or birthday or whatever? I don't know. I send my sister money because she does things for the family, and then we all pay her. She pays for it, and we all pay her. So it's really important to keep track of all this stuff that we're doing online, because I don't know what they're going to report. And it's until we see what's happening, we don't know. And all this stuff that's being tracked on our phone, I think it's good. But just know one thing, that for Venmo is very bad on the app, telling you, like, if I gave my sister Jamie $500 for dad, are they gonna, they're gonna report it? And I did this several times. But if you go on to the desktop version of it, it actually does show if you make notes in it. It doesn't show on the phone app, but it does show on the desktop version. So make sure that you look on both versions if you ever have to recreate that, if you have an audit or something like that, because that could be relevant in the future.
Great tip. Michelle has her hand up, and her virtual hand up, so I'd love to have Michelle.
Thank you. So I'm a new short-term rental owner, just started this summer. So I didn't know that, I mean, I guess I did, but I didn't think about it. So I haven't been tracking my mileage, and I have not been tracking my time. Is that any kind of time I spend on that business? So I have my short-term rental under a business LLC. So anytime I spend on my actual business, I can track that and deduct that.
You can't deduct the time,
Right.
but what you can do is possibly qualify for the qualified business income deduction. And that requires 250 hours for the year of participation with the rental. So I would suggest that you maybe track your time, because if you're doing stuff with you're paying the property management company to do it, or you're doing it, it could help you in the future. Mileage is going to be important. And fortunately, we do have a one ruling that allows us to go back in time and recreate the mileage. So you could actually go back before the end of the year, and that would be hopefully pretty easy for you to figure out what you did. If you went to Bed Bath & Beyond, Target, or whatever, Costco to buy, sheets, whatever, and to write off that mileage. And mileage rate went up a little bit this year, so that might help a little bit.
Okay. But you said 250 hours or more. Is that what you said?
250 hours or more. So, if you have one rental, it might be hard to meet that threshold. If you have 3 rentals, that's only a little over 20 hours a month in dealing with stuff, right?
Well, that's what I was going to ask. What is considered time that can be deducted? Like, if I'm doing marketing and advertising and networking for my STR, is that considered time?
Well, you're doing stuff to earn money, right? So they want to make sure that you're doing something to try to make money.
Yeah. Okay.
So let me clarify, because this is confusing, and probably we can't get all these answered in a short time. The 250-hour threshold is to say that you're a business. It's called the safe harbor, so that you can get what they call the QBID deduction, the qualified business income deduction, which is basically you get a 20% deduction on your tax return for it. Some other tax professionals, and I'm one of them, don't think you have to do that 250 to get that qubit if you really are working in profit, if you're looking for a profit. That's what that time is for. It's not to deduct your time or anything. It's just it would help you qualify for certain deductions. That's why you keep track of it. Does that make a little more sense?
A little bit. Yeah. Thanks.
I'm sure it's clear as mud, but when we say track the time, it's for those purposes, not for any other reason.
Okay.
It's for preparing for an audit. So if they, again, if they take money away from the IRS, are we going to have more audits? Probably not. But it's just preparing for an IRS audit. So I tried to prepare people to have the information ready. If we get an audit, we have it already done.
I see. Okay. Gotcha.
Which is key because you are not going to remember 3 years from now. When you get your audit letter, you're going to be like, I have no idea what I did on Tuesday, the 13th of October or whatever. Yeah. So yeah, make your notes now.
Thank you.
Can you elaborate a bit further beyond so the qubit is one, but then you spoke about material participation in a 700-hour threshold. I forgot who mentioned that. I think everyone did actually, but I think that would be a nice...
So if you want to qualify as a real estate professional, I'm on purpose not going to talk about what all the requirements are because it's absurdly complex. So I will just say keep track of your stuff. And to speak a little bit, Michelle, to your what time counts question. It's as Stephanie said, time that you're spending to make money from this endeavor. And the IRS uses their threshold is something like reasonable. So if a reasonable person would say, okay, yes, you're sitting in front of your computer, you're creating this marketing flyer, you're posting this marketing thing, you're attending this, networking event, these are things that are very clear, that are clearly related to, I am right now in the mode on the mission of doing something for this income producing activity to produce income. And then if you start getting into things that are a little more squirrely, like I went to coffee with a friend and happened to mention my Airbnb, things like that, we kind of use the phrase the sniff test, does it pass the sniff test? And if you're kind of well, maybe, or sure, yeah, totally, I can make that, I can shoehorn that in there, then that's probably not gonna fly. With the government, but yeah, that hopefully that helps and is
that did help
clarifying.
No, that did help. Thank you. So if I didn't keep track of all those things, obviously, because I didn't know, is there a way to legitimately kind of try to estimate that, or that would satisfy the IRS if an audit happened?
I wouldn't try to estimate it because that's automatically got a whole lot less credibility than recreating it. So what I would do is now, while it's still this year and you still have relatively fresh in your mind, just go back through your calendar, recreate your log now and be like, okay, I did this on this day, I did this on this day, recreate your stuff now this year. And then, starting tomorrow, you can keep track of it, as it goes, and that will be less burden. But recreate it now. Don't wait for the government to ask you for it, because as a former IRS auditor, I can tell you that it automatically has less credibility if it's something that you just made yesterday from data 3 years ago, versus this contemporaneous thing, which is just a really fancy kind of fun word to say something you made as you were going along. And I would say right now is pretty close to contemporaneous. So, it's only been since the summer. So, yeah, I think you'll have a pretty all right time, recreating your time log and your mileage log now if you do it.
I totally agree with what you just said.
Thank you. Are there other expenses that I should know about that I can deduct, or things that I don't know? Like, wow.
Well, there's all sorts of expenses, but so
Sure.
basically, what did you spend to make this money? Did you buy sheets? Did you buy paper towels? Did you give them tea on the counter?
Yeah.
Did you buy a coffee maker? Anything that you did to make more money or make money in this endeavor, you should be able to expense.
Right. No, I know that. I know I know that, but I was just thinking like about the landscaping and the mileage and things like these are things I hadn't really considered. So
Well, pest control, gutter cleaning,
yeah, no,
we,
exactly. Yeah.
we've got
Garbage.
things that
We can deduct our utilities, I assume, some of them, a percentage.
a percentage. So you're gonna be allocating, right? So if you have an Airbnb in your home, you're gonna allocate. And so anything that you do for the home, I would say that you give this to your tax pro and say, this is what I did for the whole home.
Mhm.
This is what I did explicitly for the Airbnb. So if you hired a painter to just paint the Airbnb, then you tell them that. And you're going to have the square footage of the Airbnb versus the whole home. And then if you painted the whole house, this is what you tell them. So
And can I assume you include the outdoor area? If you have outdoor space that is private specifically for the Airbnb, I can include that in the square footage? Yeah, okay.
yeah. So the 100% for the Airbnb people, you want to keep track of what you did. Like I have a client that's got, like I said, the bottom level is for the Airbnb people. There's a hot tub, so the hot tub is managed. The person who owns the home never goes down to the hot tub. So we take the whole, the people that come out and service the hot tub. We take everything that goes with the deck and all of that stuff. Even though it's part of the whole home, it is only for the Airbnb use. So you want to make sure that you very clearly tell your person that's doing your taxes that this is 100% for the Airbnb people, or this is a shared usage.
Now, if it was like, because we have a sauna and a cold plunge and outdoor shower that is just for the Airbnb, that doesn't mean we never use it. Like if it's empty, sometimes we go down and use it, right? But it's specifically for the Airbnb and it's not like it's separate from the house. So that would be
Well, it would be like how much do you use it? If you're using it like 3 times a week, and it would be a little bit sketchy.
right.
But if you're using it like, we don't have an Airbnb client this month, and I want to go use it, then a de minimis amount
Yeah.
would be okay. But if it's something that you're sharing, then no.
Okay.
And then you just allocate. It's not like all of a sudden you use, your outdoor shower thing one time and then it disqualifies it from all the expense, back to what we were talking about earlier. Then you just allocate. It's no big deal.
Agreed.
Super cool. Well,
Can I jump in and just touch
oh.
on, there was one question like way long time ago in the chat about whether an LLC makes a difference between whether you file on Schedule C or Schedule E. And I feel like that's such a common question. I wanted to make sure that we address it.
Sure,
and the
for it.
short answer is no. So LLCs are what's called a disregarded entity for tax purposes. And all that means is that just something being an LLC doesn't automatically determine how it gets reported and how it gets taxed. So the fancy phrase is the economic reality is what determines where it goes. And yeah, and it can be complicated. So talk to your tax person about planning where you'd like to be. But just something being an LLC doesn't automatically determine anything about how it is taxed or where it's reported.
And as long as that LLC is a single member. So if you and your husband create an LLC and do this rental, then you've created a bit of complication for yourself. You've created a partnership. creates another tax return. So I have a lot of, people that inherit the house from their parents. There's 3 siblings and they make an LLC and then they rent this. And it's like, well, now you're a partnership. So now you have 2 tax returns you have to do. So before you go and jump into the LLC because you listen to TikTok and they say that you do an LLC no matter what, you need to know the ramifications of that. If it's just you and you create an LLC, no problem. Again, like Jaydra said, it's a disregarded entity. If there's more than one person on the LLC, you are now a partnership. And there's a whole bunch of different regulations for that.
And what you file, and also the LLC itself, again, a single member, like both Stephanie and Jaydra says, it's a disregarded entity. It doesn't have anything to do with how you're taxed. It's a legal entity that you usually file with the state. And the other thing I want to mention is in Oregon, if you're a husband and wife, like my husband and I own our Airbnb, own our commercial building, we have to file a partnership because we're an LLC, because we're in a non-community property state. If you're in a community property state like California, you don't necessarily have to do a partnership return. So that's the other thing to be aware of.
And everybody around us is a
community
property state.
Yep.
Except for
There's
Oregon.
9. There's 9 of them in the country, and Oregon is, I think, the only one that's not in the Midwest and the East Coast. Again, something to talk to your tax person about.
Awesome, guys. Well, I feel like the writing on the wall here is we need to do this for more than an hour and a half going forward. These are super great. I actually might even advocate for this being more than, this is kind of crunch time, to get ready for the end of the year, but there might be another time that it might be relevant if the presenters wish to offer up other times throughout the year. But this is
As long as it's after April 15th, I'm
yes,
sure
yes,
we'll all be
no.
there.
Amen.
Being smart about that, I understand that for sure. I want to be respectful of everyone who's still on the call, that we have gone over our time allotment. I would say if there, I want to make sure I throw out the host-to-host note here. Again, all those members, again, thank you so much for being members of Host-to-Host, and we really hope you will continue your membership and share your members the benefit that you get out of things such as this type of webinar, so that other people will join. It is a wonderful organization that extends beyond Portland. Just so you know, I'm in New York City right now. That's where I live. So it's definitely something that I think any host who is new or experienced can offer, can gain a lot of value and bring their own perspective into things. So we thank you for being members and hope you will continue to be, and invite others to be as well.
And to keep in mind, you're doing this to make money. So therefore, in my opinion, you take this as an expense against your rental income.
Exactly. It's a business expense.
Well said. This exactly that while we are a not-for-profit org, we are not a 501c3 charity org. We are a not-for-profit org, but yes, great point to call out that this expense of what do we charge? $60 or something really inexpensive, is a business expense that is highly valuable. Look at that, really valuable. Well, I wanted to wrap it up and thank the presenters again. But I mentioned that they had some specials that they wanted to share. And so without letting everyone go and make good posterity for anyone who's listening to the recording, if we can go in the same order of the of how I introduced the presenters, which would mean Stephanie would be first. If you had something you wanted to offer to the members of Host-to-Host in this audience here, you're welcome to do so now.
Well, I'm always happy to answer questions, and if you wanted to email me, my email address is Stephanie, STEPHANIE .Soloman. It's like Sam, OLOMON. There's no man in my name. At blockadvisors.com. and you can send me an email. I'm happy to answer questions, especially before January 1st. We also, if any new client that comes in from host to host, my company allows me to offer them a 10% discount on their first year tax return. So I'm happy to do that. I'm happy to answer questions. I'm happy to work with the other two people that are on this presentation. That we sometimes we don't talk a lot, but we do occasionally after this, like bounce ideas back and forth. So I think any of the three of us are good for your if you want to use us for your tax purposes. Any of the three of us are probably equal in knowledge and experience. So, but I'm happy to help people any way I can.
Thank you, Stephanie. And I did put your email that you provided in the chat for everyone.
Thank you.
You're welcome. Jaydra.
Nice. Yeah, I assume everyone will get my email as well, but I'll put it in the chat just in case. Yeah, I don't have like a special discount for tax prep services, just because I work a little bit too hard to discount it. But I always offer that you don't have to be my tax prep client to come for tax advice or tax strategy or tax planning. So some tax preparers, maybe you have a tax preparer that you love and you want to stay with them, but planning and strategy is not their vibe because that's not everybody's favorite thing. It's just a little bit different way of thinking about things. So you can always come to me for tax planning and tax strategy. You know, whether or not you're my client. I'll share those links if you ever want that.
Wonderful.
And
Thank you.
I also will answer quick questions. I put my email in the chat, and I will offer any host-to-host member a free hour consultation. That's a $250 value to answer some questions for you. So.
Super. Well, this again, I'm so pleased to always be a part of this. And next year, I should learn to wait for this before filling out multitudes of forms. But yeah, thank you so much, everyone, for being here and giving us your time, and which is obviously very valuable. And but this was really great. Always a good time. Seriously, we might want to try to do this a different time of year after April, and or for a longer format, because I bet you, you know, the more people we get, there'll be more questions coming out. But really, thank you again. Oh yeah, we have some other links in here, so you can click on them for scheduling things. And let's see, does Zoom still allow you to save your chat? Let me just check here. Save chat.